Hey guys and gals, this is Alex Olson, multifamily broker here with Exchange Commercial Real Estate, talking to you about a new Kansas City listing we have. We call it the KU Med 7. It's 7 units on Minnie Street next to KU Med, as it's aptly named. So first of all, real quick about this video. So on the left-hand side, all I have going on here is just scrolling through some data points about the property. All of this is going to be linked in our show notes on the YouTube video. You'll be able to get access to all of these files plus a lot more. But I wanted to show you the property in real time as I'm going through the business plan in real time, so you can understand how we view this property and why the seller thinks this is an excellent property to sell. I agree with the seller. I wouldn't have listed it if I thought it was a bad property. So let's get right into it. On the right side is the actual business plan. And excuse me, the business plan here showcases everything an average investor would do to operate this property at full capacity. Okay, so this takes a look at getting rents to where they need to be versus where they actually are, and some of the other assumptions, and really kind of helps explain to you how this can fit into your business plan as you grow your portfolio here in Kansas City. So first up, we obviously have number of units, and that's highlighted here in this cell. It's 7. Purchase price, seller's asking for $895,000. That's $127,000 per unit. Pretty self-explanatory here. So here's a couple other of key pieces of information that make this deal a solid deal for for your investment. So if we scroll down here, we can take a look at how our model works from the investment side. So a couple things that banks are going to require if you're putting down a certain amount of money on this. The first thing I'm going to highlight is the debt service coverage ratio. Everybody's going to ask about that. How do I get to 1.25% or higher? That's what banks need before they even give me a yes or no. So this model has already built in certain numbers and has actually shown that this gets to a 1.26 debt service coverage ratio. So this would fit very well in a bank financing world if you're putting down 37.5%. Some of you may say, whoa, that's way too much. I only like to leverage, or I like to leverage 80% or 70% or whatever the case may be. However, this is a turnkey property, so it's a lot different than your standard value add property. We can debate all day long about what's better, a value added turnkey, near turnkey, brand new, old, whatever. But this particular model is based on the fact that this is a turnkey property. We're also going to assume that you can get somewhere around a 7% interest rate. And as rates continue to climb down, we can show you where that comes into play. And that's based on a 25-year amortization schedule. Okay, so again, these are all the major assumptions. 12 months to stabilize. That really just says we're going to get these up over the next lease up period. We're going to hold this for 5 years as part of a standard business plan. Down here in this particular area, we've got the detailed on the units, where the rents are from a market rate standpoint. You'll actually see on the left-hand side scrolling through different rental rates. And then on the right-hand side, we have really where that ends up on a total income. So 7 units for the entire year, fully occupied, would get us $90,480 in rent. Okay, so now we come back over here, and on the right-hand side, you can see all the other numbers that we're going to look at in a different tab. But this actually populates to where you can see the NOI is $59,000 and a cap rate of 6.68%. So all we're doing here, remember, there's no retrofit cost. All we're doing here is raising rents appropriately as we need to when the leases are up, because there's nothing else really to do that's going to increase the value here. Doing that would get us an actual operating cash flow of over $12,000 and a internal rate of return over a 5-year period of 17%. Your cash on cash, meaning your investment to your value, is going to be 3.68% every single year. Or actually, sorry, that's just the first year. And that number goes up as your rents continue to raise and the property appreciates. And finally, you sell. And that's where you get the 17% IRR. Okay. So scrolling down here, you can see all these other numbers. And by the way, this model is available to you when you get access to the deal file. So let's go back over here to the stabilized details. So this gets into more of the details of the property, and really where different pieces add into it. So right now the owner's not billing anything for water or pets or fees or application fees or anything like that. There might be a little bit in there, but mostly he's not doing anything on that front. There's an opportunity here in common in Kansas City to build tenants for water. Obviously, pets. He actually is not really accepting any pets right now, so that's an opportunity to make additional revenue. He's not charging for parking. That's an opportunity to there as well. Additional inputs here, we got vacancy 4% due to the density of the location, and it's high demand next to KU Med. 4% is reasonable. Remember, look at this stabilized number here in this column. This actually shows you're going to lose $4,000 if you have a 4%. But if you're better at managing your property and you're maybe in the 2 or 3% range for the entire 12 months, this number can be improved. All right. Additional details, taxes, insurance. Insurance is actually based on a formula. It should be around this $4,400, $4,500, maybe $5,000 mark for your insurance provider. Happy to provide you with insurance people that can provide you with more accurate quotes, but we feel like this formula is pretty dang close. All right. Next up on an input is water and utilities. The only utility we've got here is a common electric meter and water. Again, you're going to bill back for water, so you get most of that back. And then you have a very small common meter that's $50, $75 a month for electricity, which is the hallway lights and exterior, those kind of things. Okay. And then if you have any vacants, which you're not going to have any vacants if you're managing this correctly, it's going to be at 4% or so. Now let's hop down to management. Management in Kansas City. If you're paying more than 8% or less than 8%, you're probably with the wrong management company. Now that's just, again, that's me saying probably, that's not 100% guarantee. But take a look at your management company. Should be around 8%. And just make sure you're doing your due diligence on them. We have several we recommend. Another fee here you're going to see is leasing. Remember, these are renting for $1,200 a month. So what this says is on average, you're going to have to lease up one, maybe two of those every year or so to a new tenant. And that's really kind of where that fee comes in. That actually assumes, 75 to 100% of first month's rent. Okay. Maintenance. Typically on maintenance, what we like to see is somewhere around $1,000 to $1,500 per unit per year that you're going to have to put back into the property. And that typically includes stuff like appliances, hot water goes out, HVAC goes out, maybe some other plumbing, minor plumbing repairs, those kind of things. Now remember, this property here has got all new hot water heaters. It's got new electrical panels, all these different upgrades, HVAC, that you shouldn't have too much on the expense side. And in fact, scrolling over on the left actually shows you some of those line items, and we have access to that to see really where the current seller has. And again, some of those items actually should be CapEx and capitalized as such. It's not going to be a true maintenance item. All right, so anyway, getting all over here, let's go over to this column E. We can see 41% is how this property is being optimized to on an income versus expense ratio. And you'll see that's actually very similar to currently what the seller has right now. So we believe all these to be very, very safe assumptions in how this property will operate. And then you have your normal metrics that this spits out, your cap rate. Just by raising rents, you're going to get to over a 6.5% cap rate in a high growth area. You're going to have more than enough to cover your debt service. You're going to make money on this property on an annual basis. Another set of assumptions are when you sell, what's the cap rate? Well, we think 5.5% cap rate, fully, truly stabilized, top of market rents is what you can expect in a 5-year time frame. As well as your disposition costs. You're going to pay 6% to brokers for helping you sell this in 5 years, maybe 5% depending on the cost, and that extra percent is maybe some of your other ancillary title work funds. Income, growth, income, and expenses. Remember, we're in a high inflationary period. 5, 6, 7, 8% we were seeing over the last 12, 18 months. That's come down. We've got these pegged in here at 3%. Doing all of that in a 5-year period, sorry for the scroll there, you're going to see your total value come in here at about 1.2 million. and your proceeds are going to be 1.5 million. And that continues on down the line to where your yield on equity on a 5-year period is 91%, which comes out, if you divide that over a 5-year period using the IRR calculator, which is, internal rate of return, not quite like average rate of return, but is a good calculator to see roughly how much money you're making every single year. You're about 16, 17%. Okay. So that's a pretty dang typical desired return for most investors. You can obviously hold this on this for a lot longer, maybe 10 years, which is where that 7 to 10 years is the position I like to take on investment properties for myself. But everybody's different. Again, this is a turnkey asset. So you can't expect coming in that you're going to get a 7% cap rate or an 8% cap rate on something that needs no work. You can come into this day one and make solid money in an amazing location. I hope you've enjoyed the walkthrough here of the property on Minnie Street. Looking forward to your feedback. And if you have any questions, please reach out. This is Alex Olson with Exchange Commercial Real Estate. Call me 816-591-0825. Email me alex@exchangecre.com. Thanks again.